Imagine you are running a business where your costs are quietly increasing, but you don't even notice it. At the end of the month, your profit disappears into a silent leak, and you have no idea why. This is exactly what happens when you don't understand the cost behavior. In this video, I will explain the cost behavior in the simplest way possible. By the end, you will be able to predict your costs like a pro. Let's start. Cost behavior is simply how the cost changes when your business activity changes. Think of activity as the core of work level of your business. It could be number of units you produce or the number of clients you handle or even the number of hours you work. We call this factor X. When activity changes, some cost changes and some don't. Based on this, we divide the cost into three structural pillars. First, fixed costs. I call these the calm ones. And they don't care if your business is busy or dead quiet. Take rent for example, whether you produce 10 units or 1000 units, your lease stays the same. Next are variable costs, the reactive ones. These changes quietly directly with your activity. Think of raw material. If one unit costs $5, then 100 unit costs $500. Here the total cost changes, but the cost per unit stays quietly the same. Finally, we have mixed costs, the hybrids, and these are the combination of both fixed cost and variable behavior. Think of your electricity bill. You pay the baseline charge just to keep the lights on. That fixed, but as you run more machines, the cost increases. That's the variable part. To bring this all together, we use a prediction engine cost called the cost formula. Total cost is equal to fixed cost plus variable cost. If you choose the wrong number X or the activity or driver, your entire analysis crumbles. But here is the problem, in the real life cost doesn't come neatly labeled. How do we untangle a mixed cost if we don't know the fixed or variable parts? We use the HILO method. It is one of the simplest techniques in accounting because it only focuses on the extremes. Step 1, extract the variable rates. Take the cost at your highest activity level and subtract the cost at the lowest level. In this example, the difference between 4000 over 2000 units giving us a variable cost of $2 per unit. Isolate the fixed base. Take your total cost and subtract that variable portion we just found. Now we have a complete blueprint. Total cost is equal to 3000 plus $2 multiplied by X. X is the activity level. One warning, HILO is a quick estimate, not the exact precision. It ignores all the data points in the middle as using the starting point, not the final word.